There it goes. Right, so I think we're just going to start off with a little some housekeeping and some notes for things we have upcoming. So pretty busy September and October. So these are webinars that you can join. Some are partner webinars and some are our own. So we're starting a new series. The next slide will have a little bit more about a sort of go-to-market series that Data Central is doing, where you can sort of see how our sales intelligence tools can help you better reach your clients. We've also got some cool partner webinars catering to Gen Z and Gen Alpha. Everyone loves that. So Renee is partnering with C-Store Decisions on that one. Claire in October is going to be doing stuff on protein and produce. So check that one out. And then later in October, we have Future of Drink, always really popular with Colleen and Kelly. Make that super fun, an excuse for them to day drink. So they love that one. So yeah, feel free. You can check out all these at datacentral.com/webinars. And then here's just a little more about that go-to-market series. So it's the first time we're doing something like this. It's basically going to help you kind of dive deep into some of our intelligence tools to help understand the market and how to reach your clients better. So check those out. It's a 3-part series. Hopefully you can attend all 3, and if not, at least 1 or 2.
Awesome.
So, and although you are on this webinar, so they must be at least a little bit. We also go to things in person. So a bunch of stuff coming up. You can see the dates all over the country here. If you have any questions or would love to meet with a Data Central person in person, feel free to reach out to us at hello@datacentral.com.
Yeah, you could definitely make a full-time job just going to food conferences, I think.
Oh,
There's
yeah.
a lot of them.
I think I'd be too introverted for that job, but some people would probably love that job. So, yeah.
Yeah,
and
fun.
finally,
Okay.
yeah, right? And finally, just a plug for Data Central One. So this is sort of our all-encompassing, all of our tools together under one magnificent platform. Hopefully, those of you who are Data Central subscribers have been seeing your free trial access search in Report Pro, and then also our social listening data. That is going to go away October 15th. So, so yeah, please, reach out to your Data Central rep if you want more or have questions, because it is going to go away. So it's going to be a little bit of a change. With that, I'm gonna leave this one to you, Jack, because I know you engage that more than I do, right? We still want people to chat.
I made this slide 5 years ago, and we didn't change it. Yeah.
Right?
So maybe like 50 years from now, it'll still be used in whatever PowerPoint software is there is in the future. But so that you are not chatting to people, to just us, and that everyone can see your thing. If you're in Zoom, make sure you have everyone under who you're chatting to who can see your messages. Otherwise, you're just dialoguing with Ann and I will not be able to reply because we are going through the slides at that time. So why don't we do that as a giant test right now? If you haven't already, just type in something. I feel like we need a little niceness today.
Oh yeah,
we have a smart Alex typing in something. Yes, it's something.
Yep.
How about something, a nice, pleasant thought? Yeah.
Yep.
Good morning.
This is my question of the day, which was, at which segment was your best overall last food service experience? And I'm kind of asking this because I think there's been a lot of really interesting sort of segment blurring we've been talking a lot about, right? And like we had challenges with service and full service when we had labor shortages. So I think the landscape's really shifted. It used to be that like fine dining always won because it was fancy and unique ingredients and stuff you couldn't make at home. But I think there's a lot of like kind of interesting shifts there with, some limited service chains that are like having great experiences, like really putting customers first, have food that is interesting and unique and not just, the same old standard. So I was definitely curious to see what folks had to say about kind of their best overall experience and what segment that came from. And yeah, we're seeing a lot of QSR in chat, which, and then French Laundry.
Yeah, and you're our friend, Dr. Rosin, the food psychology professor. And he has a great thing where he asks, like, over the course of your life, what is the best or most memorable restaurant experience you've ever had?
Yep.
And then if you ask, sort of the audience, or you poll people, virtually everyone can remember who was at that, dinner or lunch, but almost nobody can remember exactly what it was that they had to eat, which is a really interesting thing. So, it's not just about the food. A lot of it's the company.
Yep. Yeah, no, absolutely. Yeah. No, and I think we're seeing brands grasp that and realize that across, the spectrum, which is pretty cool. So. All right, one last little plug for some of our awesome new content in Report Pro. Our team is constantly looking at the trends and the topics you guys care about. So we have a ton in there right now. So what I wanted to highlight was our latest inspiration report on wings. We got a lot of questions about wings. So do check this one out. It has a ton of menu data, trend examples, consumer preferences. Claire builds this and she threw a lot of data in this time around. So check it out and let us know what you think.
Can I ask the audience something?
Of course.
If you we saw like for a while wing prices spiked like crazy. They got really expensive. If you could save, let's say, 50% on the cost of wings going out, but it was because the industry has bred like an 8-winged chicken, would you go for that? 50% off wings forever, but we now have 8-winged chickens. Yes or no? Oh, okay. Hard pass. Okay, let's go.
Yeah. Okay. Yeah, we're not there yet, Jack. Yep. Okay. All right. Let's see. So another report I wanted to highlight was our little treat culture. So this is a report that we wrote that looks at a lot of consumer data. This is a trend we've been tracking. I think you and I we talked about this a little bit, Jack, on our last webinar about the Data Essential 500, because a lot of the fastest growing chains kind of fall into this. So check out more consumer data in that. So we just released 12 of these. Our segment guides have a ton of consumer data. We also pull data from our tools in here. It's like a great snapshot of each segment. We have obviously restaurants, but we also have a bunch of retail. So we do C-stores and supermarkets, and then get into on-site with hospitals, lodging. So definitely check those out. Ton of data in those. Here's a cool creative concepts. We actually just got a media question about functional foods this morning. So everyone is definitely talking about functional foods. I'm sure Jack could do a whole webinar on functional foods. So check out some cool examples, retail examples, and then some consumer data as well and what they're looking for in functional foods. And then finally, social media sensations. This is a report we do somewhat regularly where we basically test with consumers actual social media trends to see what they think of them. Yeah, can you tell what this is, Jack?
I mean, it's a matcha something, but it almost looks like green uni at the top of that drink. Yeah. Maybe that's just how it's rendering. The texture looks very weird. Is that soft serve ice cream or something? Soft serve matcha?
They're calling it like cloud matcha. And I think it's like matcha mixed with cream to make sort of like a topping on your drink. Yeah, I don't know.
Awesome. That's good.
So check it out. You can see what consumers think of it in the full report. So awesome. And with that, all right, now we're going to really dive into the fun stuff. 2026, what we expect for the industry. I thought you'd enjoy this picture, Jack. Definitely, clearly AI generated, but it like felt like a very true reflection of how I feel going into like the rest of this year and next year. As like I'm kind of protected in astronaut suit, but for some reason I'm in water and I'm like walking. Like I don't know. It captures like a lot of emotion for me.
Yeah. The question is there more for us to learn in the stars or in our oceans?
Right. Yes. Exactly.
You can make an argument for both.
Yeah. Yes, you definitely can. All right. So I'm just going to dive into some numbers. There's a lot for Jack and I to talk about here. Feel free to throw questions in chat too. 2026, $978 billion spend for consumers. Just as a little like housekeeping note, when we talk about consumer spend, we're focused on prepared food and non-alcoholic beverages. So this number does not include alcohol. Number would obviously be a little bit higher if we had alcohol in there. And then this is one everyone kind of wants to see, where we sort of see how we're growing over time, right? So 2019, we were up at 806 billion. Obviously, we had that contraction in 2020. And then you can kind of see the growth over the years for food service total. And this is the other slide. I've got a few slides in here that kind of get at the same point. And then we can kind of see if anyone has any questions. But yeah, as you can see, and we'll talk a lot more about inflation, there's sort of two different colors as we add the dollars each year. So the purple color is inflationary growth. So that's just things cost more, right? That's not really that you're selling more meals. It's just that you paid more for the ingredients and for the price of your meal. And then there's real growth, which is actual sort of increase in volume, if you will. And as you can see, the pinkish purple bars are definitely bigger than the blue bars. And in fact, I did a little math. This is the first time I've done this math, where I looked at sort of total dollars that the industry has grown from 2021 to 2026. So last 5 years, we've added $277 billion. So that's a lot. That's a lot. After
that includes the 2026 going forward number.
It does. It
right?
does. Yes. Yep. It
But,
does. So
but
it
if you go
doesn't.
back to the previous slide, the ratio is changing a little bit, right? It's actually improving. So we're getting a little bit more real growth. So we're at what, like 28% maybe real growth versus inflationary in 26.
Yeah, maybe. Yeah. I mean, it's tough.
Around,
The reality is like inflation is driving a lot of growth for our industry right now. And I think everyone feels that, right? Like there's certainly some opportunities for real growth and, additional traffic, but the last few years have really been a story of inflation. And that's where a lot of those dollars are coming from. All right, so here's the breakdown by segment. So again, we're still kind of looking at dollars. This is, I think, for the most part, pretty intuitive. We see QSR dominates, right? So that is the largest food service segment by quite a bit. Casual dining comes in sort of next largest. And then we're sort of seeing fast casual, mid-scale, and then lodging, supermarket, prepared C-stores are all kind of next in line in terms of, their portion and size of the industry. So I'm going to put on our app operator hat. So again, we're sort of, when we put together our numbers, we look at both, consumers and what they're buying. So sort of what sales and revenue are for the industry. But obviously a lot of Data Essential clients tend to be food manufacturers, and they're end buyers, not the end consumer, but is often an operator. So we certainly put a lot of time and effort into looking at operator purchases to understand, what they're thinking and how their mindset is. So operator purchases, 343.6 billion. Another note here, still excluding alcoholic beverages, but one sort of difference with operator purchasing that certainly impacted them in the last year or two is this does include sort of packaging and disposables. So it's their food, non-alcoholic beverage, packaging, and disposables. It doesn't include, new equipment or really large capital expenses, but it does include sort of those more cyclical items that they purchase.
And you said no alcohol, right?
And no alcohol. Yep.
Right.
Yeah, I'd love to do alcohol for the record, everyone. I know we have a lot of very excited, eager alcohol bev clients, so we'll see. I do think it'd be really interesting to look at sizing that, so it's on our radar. And here's just the same slide. I know I've thrown a lot of numbers at you, and Jack and I will discuss things a little bit later, but I try to put this at the end, and then everyone's like, where are the numbers? So here are the numbers to just start us off. And again, for obvious reasons, the operator purchasing mirrors the consumer spend, with QSR really dominating, followed by casual dining. The sort of full report and full version of this that's found on actually the IFMA website. We even have some extra segments in there that you don't see here that I didn't include. Like we do look at like vending, catering. So we have some additional segments that we just didn't include here. So just know that.
I think it's interesting. You said we're going to be at 980 billion in consumer spend in 26, roughly. So unless something totally catastrophic happens, we should cross the 1 trillion threshold in 2027.
Yep.
And I think we can model pretty well based on the growth rate what day of 2027 we're likely to cross the 1 trillion mark. And that should be a pretty important, we should celebrate. Can we have a special celebration webinar on whatever that day is? Even if it falls on a Sunday, let's do it.
Yeah, I love that.
It'll be sometime in mid-December, right? Or maybe early December, but we can model it out.
Yeah, I'll take a look and I'll show. I do have 2027 numbers in there already. So we'll take a look at that. I love that idea, Jack. Yeah, because I feel like that will certainly be big for our industry. And for Paul's note, the numbers do not include tabletop smallwares in the spend number for operators. So again, there's so much we'd love to, and we're sort of talking about ways to model and figure out those numbers because I know it'd be really interesting for some of our clients and you listeners. So, but let's get to the growth. I feel like the dollars are interesting, and especially crossing that mark would be a big deal. But I think big numbers are just big numbers, even for me who looks at them a lot. And I think looking at growth is a little more tactile or something. I think it's a little easier for us to think about. So in terms of spend growth, we're projecting for 2026, 1.1% real growth, and then 4.1% nominal growth. So the real growth, again, you can think of that as sort of volume, right? So you're actually selling more chicken. And the 4.1% has, inflation included in it. So you're selling, that much more in dollars of chicken, not volume.
So can I ask a question, just sort of like more philosophical thing?
Yes.
So what would it mean in a year where you saw real growth for both food service and retail food? That just means that people are eating more food as a country.
Yeah, kind of. In fact, so we'll talk about our population's growing, right? We'll talk about some of the population
Yeah.
dynamics. I think they're really going to impact our industry. Yeah, I think basically we're eating more food, whether that's like literally we're putting more food on our plate, or is it because our population is growing, and it's probably a little bit of both. I don't know. We'll have to see.
Yeah.
And Stephen, the link will be at the very end of the deck where you can find the more numbers on IFBA's website. All right, so let's look at it with growth by segment. So again, these are the same sort of like key segments for our industry. And I've got kind of again, we talked about the sort of average for the industry is going to be 1.1%. So that's for the total industry. And then you can kind of see which segments we expect to outperform and which ones are going to lag a little behind in 2026. So QSR and fast casual, you'll see, are doing relatively well. We'll talk about some of the reasons why we think that might be. Same with supermarket, prepared, and C-stores. I think those two segments have been really interesting in the last couple of years as they kind of wiggle their way into food service, really expand their offerings and their capabilities. I mean, we'll talk about them a little bit later, but I don't know if you've heard the news about Potbelly, Jack, and what's happening with that chain, right? So some really interesting stuff. And I think, in general, supermarkets and C-stores are therefore performing relatively well.
Yeah. And if we look at something like mid-scale, which we have as the biggest decliner,
Yeah.
how many years in a row have we seen that trend now for?
Oh, well, here I'm
It's
gonna
like as far back as I can remember, I think.
Yeah, right. So we had like some COVID weirdness in there, right? So where everything grew after COVID because the industry has just been decimated a little bit. So technically positive in 2021 and 2022, but already in 2023 we had mid-scale going negative. So
Yeah.
they it's been, I mean, it's interesting. There are certainly some chains that are succeeding and some brands that are doing really well mid-scale. But I think they sort of have struggled to find their footing in kind of a post-COVID world. Yeah, I'm trying to remember. I think pre-COVID they were still growing. It was just more muted than some of the other restaurant segments.
Yeah.
And pre-COVID was when fast casual was just dominating,
Exploding.
right? It was just, yeah, exactly. So in some ways that was a unique environment that's almost hard to compare to today. So yeah, examples of mid-scale are like IHOP, Denny's, First Watch, right? So it's a full service restaurant, usually doesn't serve alcohol, although alcohol is one of those things that's less of a differentiator between segments than it used to be. So full service, but tends to be often breakfast focused chains, but not entirely. There's certainly some that do burgers and evening parts. Think of them as like diners, right? They're the evolution of the American diner is what mid-scale is. Yeah. Yeah. And how would you describe casual differently, Jack, right? Casual dining's got alcohol usually. It's like how we used to really differentiate.
Yeah, I think all that's going to blur, right, over time. You could probably make the argument that they will eventually belong together when we do these segment reports, but I think we're not quite there yet.
Agreed. Yeah, well, it's interesting. We're going through phases too, where casual, we're sort of sometimes we try and break out upper casual as a slightly different segment.
Yeah.
It's again, we're sort of both adding more differentiation and also, I don't know, pulling ourselves, I don't know, more together.
I mean, it's not binary, right? It's more like a continuum, sort
Yep.
of.
Yep.
The only real binary is counter service versus full service.
Yep, exactly. All right, so another just a little bit of an eye chart, but this is a take home for everyone. I don't know that we need to necessarily look at it a whole lot because I know it's like a lot of numbers, but I also know if I didn't put it in here, everyone would ask like, what about 2023 for CNU? So here's just like all the numbers broken out by individual segment. So you can kind of see how things have changed over the last few years.
So I think December 28th is the day then in 2027. Let's
Is
get
it?
that on
Yeah.
the calendar. Probably something around there. Yeah.
So that's usually our global week of rest, but we'll pull someone out from their rest and and do like a big splashy party or something. Yeah. Sounds good. All right, so let's dive into some of sort of the macro trends driving all these numbers, kind of try and unpack, hopefully make you guys a little bit smarter about these numbers so you can kind of understand where we're coming from and how we got to this point. So first up, inflation. So obviously, talking about this a lot. I mean, the graph speaks for itself. Jack and I have talked about this on our past webinars, where you can see it's still, relatively inflated. And probably the biggest thing to point out for sort of our food service ecosystem is the fact that away from home inflation number is still higher than at home. So this is food specific. And again, we're seeing that away from home food inflation number just higher than the at home number. So, it's just a challenge as consumers are sort of paying attention to everything costing more. And so they're, sort of more sensitive to price than I think they have been at other times. And then the fact that, we're challenged with slightly higher inflation in food service than at the grocery store.
And if you see like some of the stuff on social media, like a lot of those outrage posts are more about the price of a burger at a fast food place than they are about a product in the grocery store right now.
Yep.
Can you believe it costs this much? This used to be $6, now it's $15 type of a thing.
Yep. No, it's tough. I mean, it's real. This is, I think the sort of takeaway here is that, the inflation is real. And just to sort of peel back behind the curtain a little bit and let you guys sort of see how we think about this. So obviously when we build all these numbers, we have to come up with an estimate for inflation. So kind of our best guess. The numbers in gray are sort of actual away from home food inflation. So, those are government numbers. And then the ones in yellow are our projections. So when we build these models, we do our best guess. We do a ton of secondary and sort of try and figure out what, other industry experts are saying to sort of look ahead and see what we think is going to happen. So you'll see, when we last put this together, we have that 2026 is going to have somewhat lower inflation than where we're going to end up in 2025. It's possible. We revise these again in February. I don't know what's going to happen, guys, if we're going to have to raise that up or not. But this is sort of how we modeled the numbers as you've seen them today.
And are these about a point higher than general inflation?
Yes. Yeah, exactly. Yeah. Right. I mean, the Fed aims for 2%, right? We're sort of like trying to get back to that level. So certainly it is elevated still. Yep. All right, so let's dive into some other sort of like factors that are shaping these numbers and sort of shaping our whole industry. So this is GDP growth, quarter over quarter. You guys might recall, I don't know, in Q1, we did go a little bit negative, but then in Q2, overall GDP went positive to 3.3%. A few things I want to kind of like point out here. So, I guess the first is, I feel like it's kind of important to unpack these numbers. So we look at GDP very closely when sort of figuring out what we see for the industry, because consumer spending is a huge part of GDP, and it tends to in the past correlate very highly, right? When GDP is up, our industry is doing well as well. But I don't know, Jack, I don't know if do you ever take macroeconomics? Let's see, does anyone like know the formula for GDP? Like what are all the elements that actually make up GDP? There's only 4 of them, so it's not like a ton. Does this at all ring a bell?
This feels like an ask the audience question.
I know. I was
this
just going to say, I think we definitely can ask the audience and see whether folks, I mean, I was technically an undergrad and economics major, and I actually had a great macroeconomics teacher, so I do kind of remember it. But we'll see. I don't know what in chat's chiming in, so maybe not a very government. Oh, see, there we go. We got some people. David knows what's in there. All right. So I'm going to do like a quick little macroeconomic lesson because I think it's important. Again, because we do lean on this number a lot, and it's the last couple of quarters have been a little confusing, let's say. Like there's just been a lot to unpack. And so I kind of want to take a moment to think about what's in GDP, because I think it'll help us understand why our projections, what they are, I don't want to say in spite of GDP, but alongside what we're seeing with GDP. So 4 key parts to GDP: consumer spending, investment, government spending, and then there's sort of an exports minus imports element. So these are sort of like the 4 key pieces that make up your total GDP. Now, as you may recall, I think we presented this last year, the largest part of that is that consumer spending piece. So 69% of GDP comes from consumer spending. The government piece is about 18%, same with investment. And then net exports is often negative. And so that's like a very small percentage though. And the reason I'm kind of like going a little bit deep, guys, We'll see. Maybe I'll regret this. Sort of trying to like, again, unpack how these different things are contributing to GDP. So I'm going to show two versions of this. So this is the first one, and this basically has factored in the size of each of these on the total. So you can think of this as like a weighted number for each. So if you were to sum up, literally put in the equation, consumer spending plus investment plus government spending plus net exports, it would add to that top row, right? So again, just sort of to give you a sense. And what I wanted to highlight here, consumer spending, again, the part we're paying the most attention to, was positive even in Q1, right? So GDP was negative, but we still saw positive consumer spending. The other thing, government spending was down and net exports were down. So that's really what drove down a lot of that Q1 GDP number. Now I'm going to show one more version, which again, I might regret, but hopefully you guys can follow along. So this is like not the weighted version, right? So this is just like literally what the number is before you factored in that consumer spending's 69%, investments 18. So the first version was like the mathed out version to get to the total. This is what the actual number was. And so again, just kind of wanted you to like get a sense of the scale, right? Because some of that negative we were seeing was really a lot of it's that obviously that like net export import, right? Ahead of tariffs, everyone, they imported a lot of extra stuff and then they had that in inventory. And now we're seeing it bounce back in Q2. Government spending obviously down across the board. Investment similarly, we sort of saw a lot of investment in Q1 and then a lot of pullback in Q2. And probably most relevant for our industry is sort of consumer spending, relatively good in both. A little bit better certainly in Q2 than Q1, but positive.
Hey, and when we say investment, what does that mean?
It's like business investment. I don't know. I'd have to
like capital expenditures type of stuff.
Exactly. Yep.
So is a big chunk of that sort of AI data center type stuff?
Oh, that's a good question. I didn't dig into it.
I think a lot of that was driven by a very specific form of investment.
It's possible. Yeah. Like investing in AI basically. And yeah. I'll have to look. I knew I was going to get questions on this I wouldn't be able to answer, and that's certainly one of them. So yeah, I'll have to dive into it a little bit more. All right, that's your macroeconomic lesson for the day. We're off the hook for that for the most part. Dive into unemployment. So latest numbers just released. Unemployment was at 4.3%. It's ticked up the last couple of months, but is still sort of historically low. So economists define full employment as 4 to 6%, right? So we're kind of in that range of basically full employment, right? Because there's always some mismatch and skills versus job openings. So employment's still pretty strong, which is great for our industry, right? If consumers have income, they're more likely to keep spending it. So this is definitely kind of a plus for our industry.
I had a question. Do we have any more slides on jobs or employment, or is this the last one?
I have one more that just dives into food service a little bit, and then that'll be
I guess I just had sort of a general question. Maybe this is for everybody as well, but we keep seeing like these government data, whether it's a job report or something, and then all of a sudden there's a revision, and the revision can be pretty significant in one direction or the other. And sometimes I think they're modeling stuff that is really hard to model. You got like 300 million plus people in the country, and we're trying to figure out if 50,000 new jobs or something were created in 1 month. And then all of a sudden it gets reversed and revised by 200,000 or something in the opposite direction. I just don't think you can sample with that level of accuracy. And I feel like a lot of the stuff that gets reported is more a function of modeling than it is actual data collection. But I guess for me, the bigger question is, we're probably not quite yet at the point where companies are saying, we're going to start using AI instead of people for a lot of stuff that we do. But I can't really see a future where that doesn't sort of happen. I mean, what have you heard, Anne, or like, what's the conversation been around, mass job displacement in the years ahead due to AI? I just don't see how that's not part of the equation at some point.
Yeah, I mean, it's a great question. I mean, it's not, a lot of these numbers come from the government, and there's, no offense to government, a bit of a sort of lag there, right? Where it's like they're, to your point, they're sort of modeling things, they're sampling, and so we're sort of finding errors. I don't know. I mean, it's an interesting question because I think the dialogue before AI, and we'll talk a little, excuse me, about population, is like, we're losing population. So, like, in some ways, there was real panic about not having enough workers to do the jobs, was like 2 years ago. That's what everyone was worried about. And I think we haven't figured out how AI is going to like impact all of this. Yeah, I mean, it's certainly something we're going to need to keep an eye on. I don't
Yeah,
know.
maybe the food service jobs will be one of the most durable
Yeah,
over time. But
yeah,
I think you had a question about the two axes here, the
yes.
million versus the percent.
Yes. Yeah. So there are two things on one page. Sorry, trying to like cram it all in here. So the white line is sort of number of employees in food service. So you can see that's actually been trending up. So we had a bit of a dip in February, and then we've sort of actually grown. So, last quarter unemployment total did go up a little bit, but food service is actually still adding jobs. So it's a good sign for industry that, we're still adding jobs. The blue bar is food service unemployment. So that's sort of like how many openings there are in food service, right? So, that's sort of stayed relatively steady over this time period, although a little bit higher the last couple of months.
And can you remind us what COVID looked like for these numbers,
Oh,
or where we are versus, let's say, pre-COVID?
yeah, it's a good question. I mean, I'm trying to remember because I think, oh, I should know the answer to this, and I don't off the top of my head. So we'll have to, yeah. It's like I know, yeah. Keenan's helping me out. Thanks, Keenan. Yeah, I think we're definitely higher. I can't remember how much higher, but it was like a big moment when we kind of crossed over that threshold.
Yeah. Look, I go back to this. I think in the long run, maybe the restaurant jobs are going to be some of the most durable. I just think we're going to be in for something pretty transformational in the job market over the next few years.
Yep.
So we'll see.
All right, so we're going to dive into some of our own data. So this comes from our operators panel, and we track every single restaurant unit across the country and look at openings and closings, right? So again, a couple different axes on this page. Apologies for that. So the gray bars kind of in the background are the total number of restaurant units. And then the green line is, and I did sort of a lag here. It's actually much noisier if you look at it month to month. So we kind of do a rolling 6 months here. The green lines are new restaurant openings, and the red lines are closures. So kind of a few interesting things here. We're seeing, the numbers definitely increasing in total units, but real drop off there in the openings and closings. So I don't know if you have any thoughts on this, Jack, but I think we're just seeing a lot less, basically a lot less turnover in the industry, right? We're still seeing more openings than closings, but everyone's sort of scaling back both of those, which I think is
Well,
really interesting.
I think we see 3+ years of consistently more openings than closings. And we've, I
Yep.
think, more than made up for the net closures that we saw during COVID, as you could
Yep.
see here.
Yep.
So unit counts continue to grow. I think probably a lot of these might be smaller concepts and stuff that maybe take up a little bit less footprint. But to
Mhm.
be clear in terms of what is counted here, so would like a delivery only restaurant or like a ghost kitchen type of place be counted in here? Or are these just actual physical
Yeah, these
restaurants?
are just actual physical restaurants. Yep.
Yeah.
Yep.
So I think that's
Right.
generally a positive sign, more consumer choice. As long
Yep.
as the green line stays above the red line, I think that's pretty healthy.
Yeah, exactly. Yeah. And so this comes from we do sort of a restaurant landscape report. This comes out every month, where we dive into these numbers even more detail. So I actually have sort of some segment level detail to kind of understand a little more the dynamics behind what's happening in the numbers. So here's QSR again. QSR, same with the dollars, represents in terms of units a huge portion of the industry. But you can kind of see where we had a bit of a spike in March, and then new units added. That green on the bottom, right, is sort of net new openings. And you can see that it's definitely pulling back a little bit the last couple of months. So that's something we're keeping an eye on. Looking at a couple other segments, fast casual. So again, a smaller portion of the industry overall. So fast casual representing about 30 total units. A little less clear of a story, but again, we're seeing those last couple of months are a little more muted in terms of net new openings. But again, we're still growing, right? So top line, we're still growing, but just less turnover and less change. So fewer closures and fewer openings. Couple more mid-scale. So this one's like really interesting, and I'm still kind of trying to unpack this a little bit. I don't know, Jack, if you have any theories. So again, 13.4%. So, a relatively smallish sliver. But mid-scale seems like sort of a little like it's unclear the net openings and closings and what's happening here. It's sort of increased a little bit in terms of openings the last couple of months. So we'll see. I'm keeping an eye on this one. All right, last one. So casual dining. Again, bigger chunk of the industry. So this is over a quarter of units represented by casual and upscale casual. Again, you can see the bottom is sort of the net openings and closings, and then the top is the total units. So again, increasing, but maybe at a decreasing rate, but maybe not. I don't know. Casual is kind of all over the place, which I think, sort of fits with how we feel about casual. So that one makes sense to me. All right, so some more data. This comes from our table stakes report, and we basically ask operators what their expectations are for the next month. So, do you expect your sales to increase, decrease, or stay the same? And you can see operators are pretty optimistic. I mean, and we see this. There's definitely, there's probably some, some bias in who we're asking, right? If an operator's business closes, we are no longer able to survey them. So there's some like bias probably in these numbers. But operators, they're hopeful. Like they're still sort of, expecting sales to increase, much more than they are expecting them to decrease. So there is hope with operators in the industry.
Maybe interesting to do like a psychological analysis of the particular operators and the respondents based on how they respond. Like, are the people that answer will be lower? Are they just sort of like more depressed people and less optimistic about life overall, maybe? But I think these charts are often more a reflection of what the current state of the business is, which has a lot to do with your future outlook on things. And we saw even during COVID when there was a dip and things finally started to normalize a little bit, you had a lot of optimism even in that sort of dark period. I think you're right, Ann. Operators are generally pretty optimistic about things. And I think, I don't know, have we ever seen the green line be below the red line? I don't think that's ever happened, right?
I'm not sure it has. Yeah. I mean, it's a tough business. Like to get into this business, you have to be optimistic and positive about what you can accomplish because you're climbing a really big mountain, right? So there's probably, to your point, some interesting personality dynamics with who decides to run a food service operation. So they do have their challenges. So this is another question we ask every month, and food costs have been at the top of the list, I think, consistently over the last year, if not longer. Labor costs and labor recruitment are also up there. So labor is still proving to be a challenge for operators. So they're optimistic, but they're also realistic and certainly are noting these challenges.
Yeah, it's interesting though, right? You have some restaurants or, the food service businesses that are very successful and others are struggling. And by and large, the notion of higher food costs or higher labor costs affects pretty much everybody, right?
Mm-hmm. Yeah.
That means that some other factor is the thing that actually differentiates the places that are doing really well versus the ones that are sort of struggling.
Mm-hmm.
But here, the operators tend not to be focused on those other factors. Mm-hmm. So I think it's sort of like a reversal of mindset a little bit about like the things I could really control and do something about would actually be pretty helpful in some ways.
Yeah.
As opposed to just saying, oh, my food costs are too high, my labor costs are too high, I can't really do much about it. Like maybe some of the stuff at the bottom of that list is really where more of the focus for the industry should be.
Should be. Yeah. No, I think that's an excellent point. Yeah. So another thing to sort of look at as we unpack our numbers, consumer sentiment. I think this is actually increasingly important in our industry as sort of things are a little less certain. And so, how the consumer feels, right? I mean, we're sort of talking about like vibe dining. I think there's a lot more sort of how you feel about things is going to impact how you spend and how you behave, right? Even if you're well employed. It's kind of been a little all over the place, although we're definitely seeing sentiment kind of trend down a little bit over the course of the year.
Is this the Michigan data?
Yep. Yeah. There are other metrics. This is the one we've looked at. There certainly are others out there. So we also go directly to consumers and ask them questions. So sort of similar to the sort of operator side, we ask consumers every single month, and this is if their general finances, right? Are they falling behind or getting ahead? Consumers, not quite as optimistic. Certainly more feel like they're falling behind than are getting ahead. But I think the thing to sort of note here, we're seeing some movement certainly in the falling behind, but a lot of consistency in the getting ahead, which I think, reflects what we are feeling with sort of a bifurcated, experience to the last year or so, right? With some Americans, if you own your own house or you own stocks, your wealth is actually, going really well. Things are pretty good. And other consumers are really struggling. So I think we sort of see some of that in this number here.
Yeah, that's a great chart. And I'm wondering, I mean, can you almost look at, let's say, the difference between the red line and the green line as some sort of metric?
Yeah.
We're at like, minus 22 back in July of last year, and now we're only at a minus 10, which
Yeah.
seems like a pretty market improvement. Like where the lines are starting to converge.
Yep. Yeah, I didn't do it for this, but you'll see. I'll go ahead because I did do it for this one. So we have another question where we ask specifically about dining out. So drilling a little deeper. The other one's just sort of your general financial situation. This one we ask more specifically about the coming month. Will you stop dining out or dining out less, just the same, or do you plan to dine out more? And here we sort of have, again, the three lines. I'll just jump to the next one because you're kind of curious. I think you're right. This is sort of the interesting metric, right? So this is the, dining out more folks minus the dining out less folks. And again, we're sort of seeing it, bump up and down a little bit, but also stay relatively steady over the last year or so.
And by dining out, is this even if I take food to bring home or get delivery,
Yes.
or is it just
Yes.
sitting in a restaurant somewhere?
No, this one's like spending in food service. Yeah.
Okay. Awesome.
Yeah. No, and I was curious because I think this is a really interesting number. So looked at some of the demographic differences to kind of understand a little more nuance to that, right? Who's dining out more than less. And you can see, I think this sort of makes sense. We're seeing, basically everyone's negative, right? So we're still seeing that in general, some consumer contraction and reluctance, at least in how they think about dining out. But Gen Z, millennials, much lower. So they're more likely to be dining out than, say, boomers, who have a much sort of higher negative number. Similarly, I think the income piece makes sense. Again, lower income consumers, much more likely to be more negative and to plan to dine out less. And higher income consumers, again, if you own a house and you own stocks, like your wealth is actually at like an all-time high right now. So there's certainly some real mismatch there. I thought the regional one was kind of interesting. In that landscape report where we look at units and how they're changing, we actually see that there are more units being opened in the South. More restaurant units are opening in the South. So it kind of is interesting that, kind of fits, right? That consumers in the South are also, kind of less pessimistic and so are dining out more, which I thought was interesting. All right. So that was sort of like setting the stage. There are some kind of additional risks we're going to dive into a little bit, things we're sort of keeping an eye on. I know people have already mentioned some of these things in chat. So obviously tariffs are, certainly going to impact our industry. I don't really quite know how yet. None of us do, but we're keeping an eye on it. One thing I wanted to show was, and this is government data, these are not my numbers, but the USDA Food Price Outlook. And I have I know there's a lot of numbers on the page, but like one column that has 2024, 2025, which if you look at sort of, within 2025, there's three measures, right? Sort of lower, mid, and upper. And we're whatever, 3/4 of the way through 2025. So the difference between the lower and the upper, I mean, for some categories, it's somewhat significant, but it's not crazy. And if you look at the top line for food away from home, inflation, it's not a huge range that, the government's predicting. We go over to 2026, there's some things that have just a really wide range, right? Because I think we're still sort of trying to unpack what all the tariffs are going to mean, when they're going to hit these different categories, how that's going to impact consumer purchasing in these categories, right? Because, how much consumers buy is going to impact the price. It's not just whether it costs more to bring it into this country and import it, then consumers don't buy it, price will go down. So there's a lot of different factors going on here that we're certainly keeping an eye on. And yeah, some big potential swings ahead for sort of food prices.
Is it normal when they do these projections 2 years out that you have such a giant range? I mean, these are huge ranges.
They're huge. I don't think so. I've never seen anything like this. So yeah, I think this is unique to
That's
the environment we're in. Yeah, right. No, it's crazy, which makes, my job predicting all this hard and all of our jobs because we do rely on food for what we do. So some kind of crazy numbers. All right. And, this is more sort of just consumer data to sort of highlight the fact that, consumers are feeling inflation. I think, we'd be we know this and we'd be foolish to ignore it. It's their top concern. I have, got 4 on the screen here, 5 on the screen here, but we actually ask a list of, I think it's like 10 or 12 different items. And, inflation has consistently been the largest concern that consumers have. So it really is impacting their wallets and their purchasing. All right, so the other sort of, and we've touched on this a little bit already, population, right? So to your point, Jack, like the industry has grown because there have been more people, right? Like population means more mouths to feed. I think with the industry also, we've done a decent job of stealing from retail as well, sort of packaged goods. But a lot of our growth certainly comes from population dynamics. So kind of wanted to dive into this a little bit, and you can see kind of a bit of a downward trajectory coming. And I want to unpack that a little bit. Go ahead, Jack.
So I was going to ask you about net immigration versus birth rate. Then you had a slide for it. Yeah.
I should have let you ask, and then I would have looked smart. Yeah. So this you can see is, population growth, and it's broken out into 2 different types: births minus deaths, and then net immigration. So again, that blue line is births minus death, and the green line is immigration. So we can see all of it going down, but we can certainly see how the proportion that it's immigration relative to births minus deaths is increasing, right?
It's actually this chart is crazy. Historically, most of it was coming from like people being born. And then all of a sudden, starting in 2020, it reversed very, very dramatically.
Yep.
I mean, it's sort of shocking how, I mean, for nationwide population, it's like a giant change. So we're already at a point where I think 70 to 80% of population growth comes from immigration versus people being born in the country. And I think, don't they say like by the time we get to 2030 something, that blue thing is going to actually be negative? It won't even be a positive value on that chart anymore.
Yep, that is correct. By 2033. That's
oh my God.
CBOs predict.
It's like you are literally Jack. Like an AI. I throw a prompt out there and you have a slide for me instantly. That's pretty cool.
Yep. So this is certainly something we're keeping an eye on. I know there's a comment in chat like how, Trump's new policies, right? We've been before Trump, this was sort of something the government had been watching, right? That immigration was increasingly part of our population growth. And so, definitely something to keep an eye on. If immigration really is pulled back, that's going to literally reduce the number of mouths in our country that need food, right? And, immigrant population does have a higher birth rate than native citizens. So that's going to potentially compound over time. So we're kind of keeping an eye on this because this does drive our numbers. And so, if there's fewer people, again, it's going to negatively impact our industry.
I think this is true of most sort of Western countries, isn't it? The birth rate thing. I think obviously like Japan is probably the most extreme case, I think. But I think what's happening here is actually pretty common around developed nations across the world.
Yep. So one more population piece that I, can't talk about population and not talk about sort of the other thing that's happening, which is that our population is getting older, right? So, the green bar at the very top is sort of our oldest population demographic, and you'll see it's getting larger as the other bars essentially stay consistent. And it's sort of a similar, issue, right? So basically, this is a CBO again number, but essentially our younger population is going to be growing a lot slower than it did, in the last 30 years compared to the next 30 years. And again, so that just means, I think we all know that younger consumers tend to dine out a little bit more, right? So I think that's going to be a little bit of a drag potentially on our industry as, the younger population isn't growing as much, right? And so again, some of that like inherent growth that just came with, an increased population isn't going to happen quite as rapidly because some of that population growth is going to be older consumers who tend to dine out less often.
Would it be interesting? What if AI comes along and actually solves aging, and we no longer have to age?
Oh,
That'll
they
be an
just
interesting chart at
stick
some point.
around. Yeah. Yeah.
I mean, nothing's off the table, I think.
Yep. So here's that same, and I specifically have this one. This one's focused on in-person dining, and you can see again, sort of across segments, a couple like little interesting ones. I thought casual dining. Boomers do like their casual dining, which I thought was really interesting. It's one segment that skews higher for boomers. So this is venues that they went to in the last month by generation. So boomers do seem to like to go to casual dining, but in general, we see a sort of weight towards those younger consumers, which again, as that population becomes a smaller proportion of our total population, it's going to be a little bit of a drag on our industry. So, and then on the flip side, so we asked that question about in-person. This is delivery, even more surprising, although smaller share, of course, of our total dollars. But boomers are much less likely to have ordered food service delivery in the last month than younger consumers. Not too surprising. And then we just have that detail by segment. And this one applies across segments where boomers are just not heavy users of delivery. So to the extent that that increases, right, that we see more delivery and off-premise, it's driven by those younger consumers, which is great, but there maybe aren't quite as many younger consumers as there isn't as much younger consumer growth as there has been in sort of 30 years prior. So we'll definitely drag our industry a little bit. Okay, last section, guys. All right, so to sort of end things, we have sort of select winners. So these are chains that have just done relatively well in the industry. We've got a couple minutes here, Jack. So, and I think I've got like maybe 8 in here. So I don't know how much time we have to discuss why they're doing so well, but we'll kind of like flip through some of these. So again, all these I looked at sort of Q2 2025 earnings, which is the most recent available. So McDonald's up 2.5%. These are same store sales within the US. So McDonald's actually doing better when you look globally, but just looking within the same store sales. So, McDonald's has done some chicken strips and the snack wraps are back. I think this to me is sort of a straight value play and why it's going well. They've got their like $5 meal deal. And I think that's certainly clearly resonating with some set of consumers. Another one, Domino's, doing relatively well at 3.4%. This one seems to be driven. They sort of have a new partnership with DoorDash and Uber Eats. You might recall they were like a little slow to partner with some of these. They really wanted to like own their own delivery. They've kind of like finally rolled that out. And then I guess there's also a Parmesan stuffed crust pizza that I think has done very well for them. So you'll see there's definitely a pattern with most of these where they're doing a combination of kind of menu innovation, maybe some digital investment, and sort of, a few different pieces that are driving their growth. Taco Bell up 4.4%. Sorry, 4%. So again, menu innovation, Taco Bell's great at investing in their sort of digital ordering channels too, loyalty programs. Potbelly. So I had this one in here before I even heard. So they're up 3.2%. And for those of you who maybe don't get a gazillion industry emails like I do, it was just announced that Racetrack is actually going to buy Potbelly. So Racetrack is a C-store chain that's buying Potbelly, which I think is super interesting. I've been following and done some surveys and some studies on segment blurring. And this one kind of like blows my mind a little bit. Really interested to see kind of how this evolves and how those two brands come together. So super interesting. First Watch. So this is sort of like the mid-scale darling. So this is a mid-scale restaurant for those of you trying to unpack how mid-scale is different from casual. So my kids actually love First Watch. We went there this weekend and they're doing really well. So 3.5% same store sales. The full chain is even doing better because they're also adding a ton of units on top of that. For those of you who have been, it's definitely a breakfast place. They're not even open past, I think, 3 p.m. And very breakfast forward, but like really interesting, innovative. I think this is like literally what I had on Sunday. It's like a Chipotle honey chicken hash with like some, pickled onions on top and some, fun cheese anyways. So cool menu stuff there. Texas Roadhouse. This one actually we featured last year. So they've had now like 2 years where they're doing pretty well, 5.8% up. So strong traffic. They're just really resonating with consumers. And then the last one, oh no, it's not the last one. Sorry. Applebee's also doing really well. So up 4.9%. They did like a 2 for $25 deal. So one of these casual dining chains that's really like gone price forward with their price point to really compete with some of the like more limited service, the $10 burger issue. And Applebee's has really leaned into that. Olive Garden, another one that's been successful recently, so up 6.9%. They introduced like a buy one, take one offer where when you go in and dine, you can like bring home a whole nother meal, which I think is pretty cool. They're also another chain that's sort of finally really partnering with with Uber Eats and some of these like outside vendors to sort of push their delivery business after being a little slow to invest in that. Now here's the last one. So Chili's, of course, can't not mention Chili's, like really the overall industry darling, up 23.7%. It seems unstoppable right now. There's their like cheese pull happening right in the picture. Definitely really finding ways to connect with consumers. And I think is really the brand everyone's sort of talking about and paying attention to. So awesome. So with that, again, I think someone posted in chat, here's the link, and you guys will get these slides emailed to you afterwards. So if you don't have a chance to write it down, don't worry, you will get this full presentation. But there's a bunch more detail on the IFMA website, including, all those numbers that you saw, but we also have a bunch more on like sourcing, day part activity. So we dive into a lot more for each of these segments there. Here's just a little example of what it looks like. So feel free to check out that link. And then finally, next month in October, we're doing menu movers and opportunities. So this is kind of going to be a new one for Simply Smarter. Claire and Renee are going to go through Mac movers, things that are moving along the Mac, and kind of unpack what that means for our industry, sort of see which trends are moving along faster, slower. So that'll be a good one. I know everyone loves the menu adoption cycle, so check that one out. And with that, feel free to reach out to us at hello@datacentral.com if you have any questions or don't get these slides for some reason. We can definitely make sure that you do. So please reach out to us there. And yeah.